Hi, Lara from Forex Info USA with your free daily US dollar index Elliott wave analysis for the New York trading session dated Monday the 12th of April, and New York has been closed now for 6.5 hours. Before I start this analysis, we've got a new banner picture on Forex Info USA today, courtesy of Caesar Art. I really like this unopened flower. It has a really nice fractal pattern, certainly not unlike what we see within waves. Starting this analysis with a look at a chart going back to 1985 to remind ourselves of the bigger picture. We had a 5-wave down impulse at cycle degree to end down here in 1992, and we're in a corrective cycle degree. We've had corrective cycle degree A is complete with a nice strong 3-wave movement, so this is a flat correction. Wave B is complete with also a strong 3-wave movement because B has reached beyond the start of A. This is an expanded flat correction. And we're in the early stages of a cycle degree wave C up that's going to take the dollar up to much higher highs comfortably above the high of wave A, which is about 122. And it's going to take a few years to get there. We've already taken about 2 years, so we could reasonably expect another 5 to 6 or so years of overall upwards movement for our cycle degree wave C. Wave A at cycle degree was 43.5 long. Wave B was a 111% correction of wave A, which is exactly within the guidelines for an expanded flat correction. We could reasonably expect cycle degree wave C to be 1.618 the length of wave A, which would see the dollar rise to around about 141.08 in about 5 to 7 years or so. Daily chart, where this maroon 2 down here, or primary wave 2's end down here, is this maroon 2 down here, and here's our recent dollar rises with a minor 1, 2, 3, 4, 5 to complete intermediate wave 1 up, and we're working now on intermediate wave 2 down. I've changed this wave count today to see an end to minor wave 5 blue within 1 black, and I've done that because I'm using Elliott's channeling technique to advise us when this trend is over and when the next trend is underway. Elliott's channeling technique works really well for the dollar at blue or minor degrees and above, especially well on daily charts. So instead of just having alternate wave counts, I decided to go with using this channeling technique to indicate when one trend is over and the next trend is underway. And with a full day's bar opening and closing well outside the lower edge of this parallel trend channel, we have that indication today. This trend channel is drawn with a trend line from the high of 1 to the high of 3, and a parallel copy is placed on the low of 2. Intermediate wave 2 now underway can correct to a deeper rather than a shallower degree, and can correct right up to the start of wave 1. So here's our invalidation point on the hourly chart at 79.51. That's a strong invalidation point. We do not expect price for the dollar to reach below that point. Ratios now within these minor waves, these blue waves within this first wave, are reasonably good Elliott wave ratios. Waves 1 and 3 blue, trying for equality and not quite getting there with a 0.45 difference between them. I think that's a little bit too different to say that they're equal. They're not. There's no Fibonacci relationship that I can discern between those two waves. However, wave 5 blue is a very nice 0.08 more than 0.618 the length of wave 1. So that's a nice Fibonacci relationship between waves 1 and 5, and wave 3 is slightly longest. So that's all right. Targets for the downside for wave 2 black at this very early stage, we'll simply use Fibonacci ratios, and the most likely target, well, the first point I wanted to see on the downside, but I don't think this is the most likely target. First point on the downside may lie about 79.16, which is the 0.382 Fibonacci ratio, to about 79.51, which is the end of wave 4 of 1 lesser degree. However, looking at the structure so far, it looks like wave A is breaking down into a 5-wave impulse. This is a really strong third wave. It looks most likely like a 5-wave impulse. So it looks likely that we're going to see a zigzag correction in ABC, which usually corrects to a deeper rather than a shallower degree. And as this is a second wave, and that would be the most likely depth, we can expect that it is fairly likely to take a zigzag form. That would mean my most likely target for the downside for wave 2 black is likely to be about the 0.618 Fibonacci ratio, which is about 77.27. Also coinciding in a reasonable zone with the end of wave 2 blue of 1 lesser degree, the end of wave 2 of 1 lesser degree, which lies at 76.61. So I think that's the most likely target for the downside, somewhere in this little area for the end to wave 2 black, although technically it can, and often they do, correct to deeper degrees and can correct right down to 79.51, but not below. So taking you now to an hourly chart where this 1, 2 and 3 is this 1, 2 and 3. We had a 5-wave down impulse for 1 with an ABC correction for wave 2. The ratios within this wave 2 pink are fairly good Elliott wave ratios. Wave A is 0.63 long, wave B is a 57% correction of it, and wave C is just 0.08 less than 1.618 the length of wave A. The most common relationship between A and C waves within corrections is one of equality. If, however, C wave continues past that, the next most likely relationship is that it would be 1.618 the length of wave A, and it's almost there, so that's a great Elliott wave ratio within this piece of movement here. This is a really very, very strong impulsive downwards movement for the dollar, which according to this wave count is exactly what we should be expecting to see right in the middle of a third wave. Ratios within these green waves within wave 3 pink are reasonable Elliott wave ratios. Wave 3 is just 0.1 longer than 2.618 the length of wave 1. It could be a smaller difference, but that's a reasonable Elliott wave ratio between 3 and 1. Wave 1 and 5 have a great Elliott wave ratio. Wave 5 is just 0.03 less than a nice 0.618 the length of wave 1. So good Fibonacci ratios between these waves here gives me a little bit more confidence that wave 3 pink is over and wave 4 pink is now underway. Because wave 4 cannot move into price territory of wave 1, I don't expect the dollar to get up during this correction to 80.68 or above. If it does, we'll have to completely reassess this whole wave count at the hourly level. It looks like within wave 4 pink we have a nice strong 5-wave impulse for A, with a triangle possibly forming in a B wave position. If this is a triangle, we can expect some short sharp movement out of it to the upside, but not up to not above 80.68. Thereafter, that would be the end of wave 4 corrective movement, and the next move for the dollar would be down to finish wave 5 and end wave A blue, the first piece of downwards movement for our second wave at intermediate degree. So a different wave count today. My main wave count that I had at the end of last week's trading is not invalidated, but I'm using Elliott's channeling technique really strongly. It works very well for the dollar, so I'm going to use that as an indication when one trend is over and the next trend is underway. I think there's too much movement below the lower edge of that trend channel to consider that wave 5 blue is still underway. That's all from me with your dollar analysis today. Again, free dollar analysis tomorrow, and if you would like in-depth Elliott wave analysis of the euro dollar and or the pound dollar, you'll find it on my site. I hope this helps you in your trading. I hope you had an awesome weekend, and may all your trades this week be profitable.